Good morning. This is Jared with the Helton Group. I'm going to lend some knowledge today about the mortgage market. So, going through like the news, what's going on, you have a lot of uncertainty because we have the Russia-Ukraine thing. So that's not going to help the world, but it's any uncertainty is going to probably help the mortgage market a little bit. Inflationary rises at the fast pace of 40 years. That's not good news, really, because the Feds are going to tighten policy to combat it. And I'm sure you guys are all feeling it. Where small businesses are raising their prices. Cost of goods is going up. You're having, an average meal is probably $3-4 more these days. But it's not all bad. I mean, I know that people are worried about recession and things like that, and what will happen to the mortgage business or the real estate business in general. But builder backlog, it can't keep up with demand. We haven't built enough homes in the last 12 years. So the supply and demand is really in check, as you're seeing on writing offers. We're still getting multiple offers on things. So again, even if rates continue to increase, which they're projected to do, we're not going to see any major crashes in the marketplace. The Feds meet again on March 15th and 16th, and kind of expect some choppiness probably that week in advance. So what rates have been doing is they've pretty much been going straight up over the last 30 days. You've heard me say that week over week, but this week it's kind of flat from the prior week, which is good, but still the trajectory over the last 30 days has been kind of an upward motion. So how that affects your purchasing power. So, same thing, I do buy loans without points. Obviously some people put down points, and that makes sense for a lower rates and a kind of a longer term benefit, but a shorter term loss. So, same week over week, that same $320,000 loan with $350 in homeowners or property taxes and $75 in homeowner insurance would be a little over $2,000 payment. Last month at this time, it was $1,930. So what's that? $93 difference. And then a year ago, that time, $1,790 or so, $1,800, so $225 difference. So kind of a big difference, but still a good time to buy. And then same thing, purchasing power, same week over week. A month ago, $424,000 house was the same as payment wise as a $400,000 house today. So always a good time to get off the fence. And then a little tribute to last week's Super Bowl. We have the number one song in November of 2002 was "Lose Yourself" by Eminem, and rates that day were 6%. So still higher than what they are today, but we're in a good place. And then if you have any questions or need any help, we're here to help over the weekend. Be glad to help you with your pre-approval. So just reach out to us, and we'll talk to you soon. Thanks.